Hi, and welcome to Ask the Mortgage Expert. Today we're going to take a look behind the mortgage curtain and see what banks want you and don't want you to know. Last week I saw a restaurant review on a local blog that touted the New York Times says, and I at that point thought for a minute, the Times didn't say anything. The person who wrote the article and somebody that works for the Times did. One person, one opinion, not the entire staff and their collective opinion, but one individual basically invoking the mighty Times just because the reviewer works for the New York Times. Now that transfers the credibility and the credentials of the entire institution to the individual and turns an individual opinion into a powerful endorsement. When someone refers this to writing, chances are they'll say Forbes.com said and not John Smith said. On Forbes.com, you'll take a look and you'll go on there and they'll endorse it, of course. It works for the company. You see what I'm trying to get at? Who's John Smith is replaced with the towering credibility of the Forbes.com brand, which is unknown uncertainty, and it's instantly transformed into concrete, factual evidence. So the mortgage lending business is hyper-competitive. And mortgage originators, they come in all forms of education, training, experience, affiliation. With 25 years in the trenches, an undergraduate finance degree from a reputable university, countless hours of training, continuous education, and the trust and goodwill I have built with the many sources that refer clients to me, you would think my capture rate would be bulletproof. Not even close. I've seen and lost business to mortgage people with less experience, less training, less education, simply because they work for lenders with household names. A prospective client will tell me they talk to Wells Fargo, Chase Bank, Citibank, whoever, and they have adamant and unwavering faith in the information that they've received from these banks. When I hear Wells Fargo told me this, or Chase told me that, or Citi told me this, I recognize right away that I'm competing with an institution and not the rep. You have to remember, these institutions hire these reps, so I'm not dealing with that rep or the employee of the institution that the bar actually spoke with. I'm thrust into a mortgage contest with the great and powerful Wizard of Oz, the booming voice and the pyrotechnics, not the little man behind the curtain. And it's the little man behind the curtain that is quoting terms and offering up the advantages of working with the biggest and baddest lenders and the most amazingest mortgage lender on the planet, which is how they see it at the time. Now, in the past, I proposed that the person that they spoke to was merely a representative of the institution, not the institution itself. But that's often to no avail. Still, they see it on the commercials, they read it, they believe it, they're online, it's all there. So these credentials, they're not a prerequisite for addressing and assessing expertise or even competence when a consumer shops. You're looking for a mortgage lender or broker, name recognition is a big deal. Transferring the credibility and credentials of the institution to the individual gives consumers a sense of comfort and security that eases the requisite leap. And this leap of faith when choosing a mortgage lender is key. Now, here's where I share an industry secret right now with you. So, you ready? Mortgage people are salespeople. First and foremost, the primary goal of a mortgage originator, loan officer, or whatever you have is to convince you to apply for a mortgage with their firm. Okay, the financial acumen is helpful, but not required. The best salespeople are the biggest producers in the mortgage industry. Consumers looking for the most skilled financial mortgage expert often choose the best salesperson. Expertise and wherewithal vary along greatly disparate continuum. Mortgage originators are fond of titles, so choosing a lender based on how remarkable the rep's title is may be perilous, starting with loan officer and, of course, senior loan officer. I've seen vice president, advisor, consultant, planner, and the more impressive senior versions of all of these. Adding initials based on graduate education, MBA, or related field licensing, CPA, and title crowning can become quite prestigious. Although I have to admit that I've always been impressed with the CPA moniker of one of my colleagues and his business that goes along with it, and his business card. He's a very senior, highly respected loan originator and manager that I've worked with for many, many years, and he is, in fact, a CPA, which definitely garners a lot of respect from his clients and appropriate differences based on his knowledge of the numbers, and he gets the accolades of his peers, me included. Initials is part of a title, speak to credentials and expertise, simple. Originators with these initials should go on your short list because titles mean nothing. Okay, you could have the greatest title in the world. It's not the best starting point to start a relationship or to take somebody into consideration when selecting a mortgage originator. Remember, even the great and powerful Wizard of Oz is really just a guy behind a curtain. In 1995, I was a loan officer with Financial Equities, Financial Resources down in Cranford, New Jersey, and the great David Findell, legendary mortgage management tough guy, who was my sales president. I knocked on his door one day and asked him, what are the requirements for me to become a senior loan officer? He looked at me. He asked me, how long have you been in the business? I said, I've been in the business for 2 years. He smiled and said, congratulations, you're a senior loan officer. I laughed. I walked out of the office. I thought about it a little bit, and that was that. I had new business cards within a week. No tests, no additional training, no scorecard, just presto. You're a senior loan officer. I'm soon to be vice president. So, senior loan officer, beware the fancy title. Nowadays, just about every real estate office also has an in-house lender with an originator right there in the office. You got convenience, you got accessibility. This must be the right answer. Why else will the lender have such coveted positioning? In-house reps exist because there's a mutually beneficial financial relationship. Make sense? The lender has unrestricted access to agents and buyers, and the real estate company is compensated by the lender. This is used through a marketing service agreement, or otherwise known as an MSA. These joint ventures, their desk rentals, and whatever other form these relationships take, and may seem counter to RESPA, which is the Real Estate Settlement and Procedures Act, and those are the rules that are governing compensation for real estate referrals, etc. But they are industry norms. That being said, an in-house rep can be a great choice, depending on the person. But then again, expertise and wherewithal vary along, and there's a greatly disparate continuum. The web has exploded with discount mortgage financing options, offering fantastic terms and lightning fast closings. Now, the idea is being that the absence of a brick and mortar company or building and the costs associated with traditional lenders allows for discounted below market rates. That's what they're selling you. Sounds great, but it's not true. The largest online lender has over 8,000 employees manning phones and populating cubicles in office buildings and getting loans closed. The brick and mortar costs are part of their income statement. You can check it out. Go online. Online financing right now is popular with tech-savvy consumers. They think they're getting over and they're getting the best deal. And it can be a convenient alternative to traditional lending sources. Significant interest rate discounts are offered online. Financing sources are advertised. Low rates, low APRs, like everything else. If it sounds too good to be true, it probably is. And what about all these local or regional mortgage companies with names that are not so well known? The correspondent mortgage lenders, the direct lenders. Correspondent lenders employ their own processing, underwriting, and closing staff, and we use warehouse lines to fund loans. We specialize in residential mortgages, and we tend to have more entrepreneurial spirit, and we tend to look at loans a little bit differently and a bit longer. Our cultures and the originators that work within these cultures were generally independent and experienced. But just like the big banks, the in-house lenders and the worldwide web reps, expertise and wherewithal vary along greatly disparate continuum. So just how is a consumer supposed to choose a mortgage lender? That's what we want to get to the bottom of. What should the decision tree look like? Start by asking someone close in your universe that has recently gotten a mortgage. See if they can recommend their lender. See what went right, what went wrong. Those are questions you're going to want to write down and then ask. Ask a financial advisor, an accountant, your attorney, or your realtor to help you with a short list of lender referrals. These people deal with mortgage lenders regularly and can help you. A realtor wants their loan to close, if they're smart, obviously, first and foremost. They're not looking for handouts. So you filter that continuum with a greatly disparate expertise and wherewithal, add confidence to your decision. Do your homework, search the internet, and thoroughly investigate offerings for details. Advertising is very shiny, so squint through the glare and find out about fees, lock-in periods, points, and qualification requirements for what is being featured. Remember that the point of entry with every lender you consider is the salesperson. Okay, that's your point of entry, your port of entry, and everyone you talk to will sound like the best deal. take notes and ask for things like good faith estimate, truth in lending statements to be emailed or faxed to you. Now you have documents, you can compare things back and forth. The mortgage lending industry is electronic. Everything's available to you in writing instantly. So don't let people tell you that you have to wait a week or 2 weeks. At the end of the day, your mortgage loan will be originated, processed, approved, and closed by people. Okay, these people, the software and institutions will be the platforms that allow individuals to do their jobs. But you're choosing people to help with the single biggest financial decision most people will make in their life. So beware the man behind the curtain, but if you trust in your lender's rep, the result of your vetting process, chances are you'll have chosen well. Thank you, and by all means, give me a call for a free consultation and evaluation. I'm Sal. My number is 718-869-4795. Thanks for watching this extended video, and have a great day. Take care.